PayPal faces a $53 billion takeover offer from Stripe and Advent. The headline that's been making waves in the financial technology world: PayPal is the target of a $53 billion takeover bid from Stripe, the online payment processor, and Advent International, a private equity firm. This offer, described by analysts, could reshape the entire payments landscape, with ripple effects felt by merchants and consumers alike. Let's break down what's happening. PayPal, known for its person-to-person money transfers and the Venmo brand it acquired in 2013, has been grappling with slowing growth in its core branded services. In fact, its last year's share price fell 24%, and barely a month ago it replaced its chief executive with Enrique Lores, the former HP executive who now chairs the board. Those moves signaled a company in transition, and the market has reacted by weighing fresh capital on its future. Enter Stripe and Advent. Stripe supports e-commerce merchants worldwide, processing payments and offering a suite of developer tools. Advent brings deep private equity experience. Together they have put forward a bid that includes roughly $50 billion in committed bank financing. The deal would value PayPal's shares at about $60.50, roughly a 28% premium over the price a day earlier. What would a completed acquisition look like? Stripe would gain a powerful foothold in the consumer digital wallet space, in particular through Venmo. Last year, Venmo handled roughly $300 billion in payments, about one-sixth of PayPal's total $1.8 trillion processing volume. For a company that was last valued at funds $159 billion by private investors, Stripe could be looking for a way to scale its own technology and cloud platform far beyond e-commerce into everyday consumers. Of course, the deal would not go unchecked. Its size would likely trigger regulatory scrutiny, especially under the current administration, which has been more cautious about approving large tech consolidations compared to the previous one. Still, the statute of limitations for antitrust reviews can be long, and the industry still looks to history for precedent: 2018's PayPal Venmo acquisitions and subsequent tighter scrutiny by competition regulators. Analysts from Deutsche Bank note that this move, whether or not it materializes, signals continued consolidation in payments. They anticipate that other bidders could surface, or Stripe and Advent could sweeten the offer if PayPal rejects it. Meanwhile, William Blair's advisors question the strategic logic behind the deal. Stripe is already the clear leader in e-commerce processing, with superior technology and high-profile customers, they point out. They consider this bid perhaps an opening salvo, not the final word. So, what does this mean for PayPal's shareholders? The current professional adoptee strengthens the company's negotiating leverage. Its shares spiked 17% on the news of the offer, reflecting investor excitement. The board will likely consult advisors and weigh financial, strategic, and regulatory implications before deciding. In sum, a $53 billion takeover proposal from Stripe and Advent could bring PayPal's Venmo under the same ownership umbrella that currently sits with one of the pay processing giants. It could accelerate integration between merchant-oriented and consumer-oriented payment services, potentially creating new cross-sell opportunities. At the same time, the massive scale marks a tipping point for regulatory review and sets a benchmark for Okerpok commitment of bank financing in future tech deals. That's the pulse behind the headlines. Good morning, and I'll keep you updated as this story unfolds. Thank you for listening, and see you next time.